Hi everyone, today we're going to be talking about market capitalization and equilibrium prices and how we can adapt it to the Singapore's property market. So, both of these concepts have been around in the traditional finance field since a long time ago, but we can kind of adapt it to our current Singapore's property market to help us understand how we arrive at certain prices right now and whether prices are sustainable. So, for instance, let's say we have a condominium out there that has 100 units in the whole condominium complex, and the past transacted prices puts us at an average of, let's say, about $1 million each unit. Let's say, for simplicity's sake, the condominium has all one bedroom units, everything is the same. So, let's say today there was a new transaction coming in for $1.1 million, 10% more than the original. This makes a big difference because moving forward, all the rest of the 99 units in the condominium, when they choose to sell it, they may be inclined to tell their potential buyers, or even if you were the one selling it, say sometime next month or 2 months later, you might tell your future potential buyers that, hey, look, there was a transaction for $1.1 million just last month, and you might be inclined to push the prices from 1 million to closer to 1.1 million to try and match whatever the previous transaction was. So, notice how all of this came about was just through one transaction. There weren't 50 transactions or 51 transactions to set the majority, but one transaction always has the ripple effect, just like how creating an entry on the order book in a traditional finance market creates the same ripple effect in traditional money markets. So in our real estate market, if somebody was transacting at a much higher price, they will eventually be the one setting the new price entry levels. This is a big factor because for all your future purchase and your selling decisions, always consider whether the current prices are inflated because of maybe highly renovated units, or because the market is super hot, or there's a bunch of mania going on in the market right now. But determine whether the current prices are sustainable, whether there is a lot of transactions to support it. The more transactions to support it, the better. And any of your future purchases, any of your future property projects that you're looking into within your portfolio, do consider what is the odds of you exiting your property. A project that has a lot of units will find it much easier to see transactions to support their future selling, whereas something that is very boutique, something that only has maybe 10, 20 units in the whole development, just a very small project, may find a much harder time to achieve the price that you want, potentially even taking years just to get the price that you want. So, that being said, that's all for the topic today. I hope this has been helpful, and I hope this is a good way for us to kind of understand how we achieve current price levels in all the different condominium projects or even landed projects, HDB projects that we have in Singapore. Do let me know if there's other content that you are keen to know, other kind of topics that you want to know about, and I'll get back to you.